evening to all the stock market enthusiasts joining us today. We are hosting this session to discuss in detail the market outlook at 16,150. Today, we have with us esteemed guests on the panel to take the session. Our first host and first speaker is Mr. Prakash Pandey, who is the founder and managing director of Plutus Group. With more than 18 years of market experience, Prakash sir has truly been an influential personality on the young minds and has been leading a vast community of investors. We extend a hearty welcome to you, sir. Our esteemed guest, Mr. Safir Anand, one of India's top IP attorneys and also an active investor in the stock market, is a senior partner and head of trademarks, commercial and contractual IP at Anand and Anand, with over 25 years of experience in providing inputs on strategy, business models, marketing, and commercial insights, blending with an astute understanding of IP law that encompasses IP protection, IP enforcement, IP agreements, licensing, franchising, monetization, and due diligence. We extend a warm welcome to you, sir. Now, I invite Prakash sir to take the session forward. Over to you, Prakash sir.
Thank you, Kritika. Thank you so much. So, Anand sir, can you hear me?
Yes, hi.
So, Anand sir, can you hear me?
Yes, hi. Good evening. Yes, I can hear you. Good evening to
Yeah.
everybody.
Good evening, good evening, good evening, good evening. So, how are you?
I'm good. How are you? How I believe you're traveling.
Yeah. So, good evening, everybody. So, first of all, let me congratulate you for giving us that cautious view on the market, and somehow more or less on the mid cap and small cap, exactly the same way it has been played out in last 10-12 days. We are seeing some serious drop in small cap and mid caps names, though we saw some kind of a minor recovery in last 2 hours, but that is not a huge one, a small, just a small bounce. So what is your current take? So let's start with the mother market. So what is your current take on US markets, as they are, they're showing some sign of resilience around 31,000 on the Dow, once this latest Fed minutes of the meeting is out. So it's not like now the fear is little bit settling down. What is your take on US market? First of all, let's start with that, and then we'll dwell upon the Indian stock market outlook and everything.
Yeah. So today is a relatively difficult day to make a comment on the U.S. market because, like you rightly said, there is the U.S. Fed action, and people have just come back. There is a lot of commentary that has come out from Davos, from some of the leading investors. I happen to hear some of the views, particularly of George Soros and a few other people. Uh, I- un- Unfortunately, the view that they have been expressing is not a good view. They're talking about a profound slowing down of the world economies. The from Christian Lagarde to our IMF chief, who's from India, even her view has not been very favorable. But there is a second side to this, which is that it is very interesting that while the investors are showing more they're more jittery about the global conditions and the ramifications of where it will lead to. There is a slight positive, which is the fact that the Indian entrepreneurs who were at Davos have not shown the same sort of negativity. The Indian entrepreneurs, on the contrary, have said that it was a golden opportunity for them because China was not allowed to participate. There was no Chinese participation at Davos. So a lot of Indian entrepreneurs met their counterparts, and therefore, to that extent, there is a little bit of buoyancy on their confidence level as far as tie-ups are concerned. And in reality, what matters is what the business does. The business reaction is always going to be more supreme than the reaction of investors. Investors will follow what business does, because if the business prospers, investments will come back. So, what has basically happened in my assessment from the last time that we spoke was that there has been an increased correction in the market. I think another 3-4% has gone from the time we spoke, at a bare minimum level. In mid caps, in some mid caps, the fall has been much more severe, 10-15%, 10-15% further from where we were. There is a situation where the market is not reacting even to good results. The market is punishing bad results, but is not reacting to good results. I had told my thought process was that there will be an impact of the Bitcoin meltdown, because people will have margin calls and other thing losses, because even if they don't have margin call, they'll have losses, because one asset class falling means that somebody tries to sell. Unfortunately, people sell their winners, they don't sell their losers, because they feel the losers will always bounce back. So some part of the reaction came also because of Bitcoin. Some part of that reaction on Bitcoin continues to be a big worry from a global perspective. But the most unexpected loss in the Indian market came from the policy decision on metals, because it was not, while the government has done it from an inflation perspective, which is fine, which is justified from their standpoint. The sudden crack in the stock prices by 15%, 20% that followed on Monday, when it was believed that on Monday the market will do well, because there was an announcement by the government on the weekend, but the meltdown in the metal was so severe, metal stocks was so severe, that again it caused losses to a lot of people. And it also to some extent put off the possibility of some possibility of privatization or disinvestment, because the government owns a lot of mineral and metal stocks and oil and gas stocks and oil and marketing companies. And therefore, by the sheer erosion that followed, there is a fear that has come in the market. That fear extended the next day to sugar, although it was very clear from the statements made at Davos by both our ministers, as also then by the Sugar Association and then by Balrampur Chini's managing director, that the action will have no ramifications, because we are nowhere close to the 10 million ton export. We are still away from that. But the government did indicate that they want to play it safe, because when festive season comes in Diwali, they don't want sugar prices to escalate. The funny part is the market reaction to sugar, according to me, was totally unfounded, because the sugar story was an ethanol story. It is not to do with the pricing of sugar. In fact, sugar prices have not moved in consonance with the inflation. They are still about 34 rupees. The rate of movement has not been high, and the market just got jittery and it punished those stocks. So the silver lining that I see is that when market gets into a very jittery mode, a lot of action happens instantly. For example, somebody dumps a stock and the stocks go down 15-20%, etc. And at that point of time, like they say, it may sound very cliched, but it says weak hands exit the market, and then a stability comes in. And it's possible that in some of these counters, in some of these sectors, some level of stability will come in. In fact, the government, on the contrary, at Davos, made statements that the ethanol blending target has been accomplished before time, and therefore it will be given a further push. And today, if you see that there were certain ethanol players, I will not name them right now, but many of you people are very smart enough to know they went from lower circuit to upper circuit.
Correct.
Um, yeah, so just to so those are good signs. So according to me, the negative part about the market continues to be the uncertainty, which we are all unfortunately have to bear. The positive part of the market is that the uncertainty has caused correction in individual scripts, which have made those individual scripts look rather interesting. I also got to know by, because I was making calls to some of my brokers just to generally ask what's the mood like, etc., etc., that some PMS funds have seen redemptions, and therefore there has been a greater fall in some PMS stocks compared to mutual funds. There is no redemptions according to the general information that I have on the mutual funds, because retail continues to do SIP there, and because the mutual funds NAV is not, doesn't have normally it's not that the next day you see an erosion of NAV, but in the script, you see an erosion, because you know what the fund owns and you know if it falls. And therefore, it was a fast and furious reaction. Some of it should get arrested now. And to that extent, like we had discussed in the last call with Prakash ji, it may be a time now to start looking at an individual basket of stocks, where you may not buy everything tomorrow, but from tomorrow and from the next day and from the next week and from the next month, you can be slowly accumulating. After, I think, February mid, I have turned a very small buyer myself in the market. It's a small amount, but everything counts in life. And that is my synopsis of what I believe is the current situation. Of course, with the caveat that I'm not a registered advisor, and therefore please be very careful about the fact that what I talk about is my own actions and my own investments.
Yeah, we are just talking about your view and what you're doing currently, right? It's not a public general advice, right? So people can do their own due diligence and act accordingly. So now we have covered the Dow and everything. Like, so what is your view on the crude and overall dollar INR pair, right? Because that is going to be the two macro indicators which will somehow, in the midterm will decide the future of Indian stock market. So
See,
one is
crude is not showing any signs of cooling off, because when it cools off from 114 to 111, 110, it goes back to 112, 13, 14. It must cool down quickly, because we also know that in winters the consumption of oil goes up because of the requirement for heating. And right now it is the other situation. We are in the midst of summer, so it must cool down. Of course, if it cools down, it will be very productive. I think the government's concern is also this. Mr. Hardeep Puri was making a statement in Davos, and I was listening to it on television, where he said that crude oil should not sustain at these high levels. I'm sure that the leaders around the world are trying to explore whatever they can do. For example, can they increase production, or what they can do? But this unique situation that Russia has put everybody into currently seems to be in a not ending situation, at least for now. So crude is a very difficult call to take. The dollar index is stabilized and is come down, which is relatively more favorable. But you see, I'm not necessarily just making a comment based upon oil and crude. For me, the more important thing is I'm an individual investor. I may have a forte to invest, or a sort of a belief that I can invest in certain kind of companies where I'm much more comfortable. Now, the valuation knockoff in a lot of these companies actually has made you feel more comfortable. You feel bad, obviously, because you had companies in your portfolio and your portfolio would have gone down. But then the ability, it's not that you are, it's not that your legs are shaking and you're worrying about the fact that some of the stocks that have fallen, will they really put you off so much? The question is, some of them are looking interesting. Unfortunately, money is a limited, supply, and we can only deploy as much as we have. But I have started, at least started looking at a few companies. And very frankly, given a choice, not given a choice, I'm actually working on it. I will be deploying within the LRS scheme of the government of India my full permissible limit in US technology stocks in a matter of few days.
okay. All right. Great, great, great. So, what is your overall screening method like, right? So, what do you see first, like basic return ratios, and then you go deep into the con call transcript and what is the basic process
So,
of you?
yeah. So what had happened is, in the month of February, one of the things that I had expressed on the ET Now show and thereafter on the Twitter Spaces talk was that I'm not feeling comfortable about the market, because I had indicated that retail's behavior was yet to be tested. I said that retail India had seen a lot of profits in the last 2 years, and therefore their entire, they were putting a lot of money in the market, and and the FII selling was also absorbed for several months. But retail, that was also because the market was not falling. So even if it stagnated later on, the point was retail was not losing money. But in the last few months, the retailers started losing money. And when retailers started losing money, I said that this situation must be seen from the perspective of what they do. It has now turned out that retail has started selling. It is not, the selling is happening in direct equity. The selling is happening in a lot of PMSs, and it's not happening in the mutual funds right now, because some part of that may be just a behavioral pattern of people, salaried people, and the sort of money that they're deploying. But retail has sold. Some of the selling has been also good in a sense, because some margin calls, etc., were out of the system. Some of the margin calls were triggered by extraordinary margins imposed by SEBI, which really was actually counterproductive for the market. But be that as it may, some of it came by the losses caused on bitcoins and the metal stock crackdown, and hopefully some of it will be out of the system. So what I am basically doing is that in that time of February, I was trying to buy what I believe would have given me some amount of return without having to get troubled. As an example, I did miss out and I did not own ITC, and that is my mistake. But ITC, as an example, did phenomenally well. But I did write about buying Hero Motocorp and buying Colgate Industries, very two unconventional bets. And both Hero Motocorp and Colgate did very well in this meltdown. I think Hero Motocorp went up more than 20%, and Colgate must have gone up some 12-13%. So what I basically done was what I'm doing now is that I'm exiting some of these stocks, or I've sold some. I bought another company called TVS Motors, which I spoke about on Twitter, which I think went up from 540 to about 700 rupees. I've sold these some of these positions in my personal capacity. Personal capacity means that I don't know what you will do. I'm just talking about my own actions, and
Correct.
and I'm deploying the money to mid caps and small caps because my it's very simple. I take a sheet of paper. On the sheet of paper, I write what I own. Then against that, I write, can this stock give me a 20% escalation? The answer to me in some of these companies appears to be that even if they will steady my ship because the market is jittery, they're not likely to give me a 20% move from here till the end of the year. From here till the end of the year means now only a matter of,
7 months,
six
6 months,
months
six
or
months,
yeah.
6 months. Yes,
So
yes.
if a stock is able to give you 15 to 20% returns in 6 months, it's phenomenal. It means 40% for the year. Whereas I find that in some of the mid cap and the small cap names, that is very much achievable because their sheer fall has been so stark that it is possible that they will recoup some of their grounds. And if it is not in 6 months, it will happen in 12 months. And therefore, I'm moving some of my money to what I believe are good companies that have corrected significantly. The reasons for the correction could have been a liquidation by some PMS or by some fund, or for example, it could be a unique situation of fear, or it could have been one quarterly result disturbance. Because if you believe that inflation is transitory over a period of time, then it is not possible that these companies that are facing the pains of transitory will also not come back. In fact, I firmly believe even metals will come back. I was negative on metals all of February, March, April, and I actually put a lot of tweets saying that metals will crack and banks will hold. And I believe that there is value that is emerging now, even in some of the metal and mining stocks. I don't think the government will hold this restriction for too long. I think the moment inflation set, because at the end of the day, see, it's going to be counterproductive to PLI. You cannot be doing, let's take an example that we want to manufacture, we want to produce in India, and we have a PLI scheme. So you are basically telling those commodity manufacturers like a metal company or an aluminum company or a rare mineral company that no, don't scale up, because they won't scale up if they don't, if they're not able to export. And if they don't scale up, then it's that entire concept goes hand in hand. So as soon as inflation starts settling, that is not something that I cannot put my finger and say that this is the date on which it will settle. But as soon as inflation settles, I think the government will become a little more liberal with its rules. For example, in sugar, they have clearly hinted that we are waiting for the Diwali season. So effectively, they are hinting that this entire restraint, which anyways, according to me, is not a meaningful restraint, but is only going to last till the festive season of Diwali, and then it is likely to be eased. So I believe that I think by that time, even export of wheat and other things, the market is also reacting to fears of now people say rice will not be exported. Now it's not as if the entire production of rice that is done in India is way more than the consumption. So it cannot be that it will just be stored in the warehouse and do nothing. I don't think some of these restrictions will come, or they will come in a much more calibrated manner that will not be very destructive. And I therefore believe that any levels of stability that comes will be much more rewarding. Incidentally, Mr. Piyush Goyal from Davos even made a statement that he hopes that the RBI does not tinker with rates. So, in a sense, now it is also it is very obvious that on the fiscal side and the monetary side, both sides, some sort of efforts will be made, in order to handle inflation or to sort of do things. And I think the market is in certain pockets overreacting. Of course, I could be wrong with time, but that's my reading of it now.
Thank you so much, Safir ji. So I have three, four more questions for you, but right now we have Sushil Kedia ji. So let him speak for 10-15 minutes about the markets, and then we will do a final round of Q&A and all, right? So Sushil ji, please start with your Nifty, Bank Nifty outlook.
See, I hope I can
First of
finish
all,
off in five
first of all,
minutes.
good evening, and start with your Nifty, Bank Nifty outlook.
निफ्टी बैंक निफ्टी से भी ज्यादा एक और जरूरी चीज है
हाँ,
एंड
बोलिए
आई
बोलिए.
होप आई कैन रैप अप इन 5 मिनट्स. ये लास्ट
You
छह
have
महीने में
10
जो
minutes. You
नहीं
have 10
लास्ट छह
minutes.
महीने में
You
जो
have,
पोर्टफोलियो की चर्बी निकल गई, तो हमने लास्ट 10 दिन से सोचा सवेरे 4:30 बजे उठो और सूरज उगने से पहले 2 घंटा वॉकिंग और वर्कआउट करो. तब उस रेजीम को छोड़ना नहीं है, पोर्टफोलियो का जो भी हो. आई होप आई कैन टेक योर लीव इन नेक्स्ट 5-7 minutes. बट माई की पॉइंट इज, बाप बड़ा ना भैया, सबसे बड़ा रुपया. See, there are endless number of dimensions. Each of us, based on our taste preferences, will be obsessed with our own ideas. I am therefore obsessed with my own idea. And whenever I see a major point on the dollar index, I've trained myself to suspend my descriptive intellect. Dollar index came and made a slight nudge higher than the March 2020 low. मार्च 2020 में जैसे पूरी दुनिया की फट गई थी, the extreme fear coincides with America ka dadagiri. Now see, in the current round, in the recent round of last 4-5 months, if America is the one that was hit with inflation first and in the most furious manner, and then these logistics issues created some sense of inflation percolating into specific commodities world over due to logistics. So the nation that had the most glaring rise in inflation first, eventually बाकी लोगों ने भी कैचअप कर लिया. That's a process of exporting inflation using arm twisting. See, रशिया वेंट एंड इन्वेडेड, अमेरिका खड़ा हो गया, यू कांट इन्वेड. अमेरिका की हिस्ट्री वो जीवन भर इन्वेड करता है. जब भी चाइना आके अगर करेंसी मार्केट में कुछ बड़ा एक्शन ले लेता है, रशिया यूएसए इमीडिएटली accuses that there is a currency market manipulation. Goddamn, America has been manipulating every currency in the world since 1974, ever since the Bretton Woods Pact fell. Before that, only up to the extent of gold, any central bank could print currency. So if America has been keeping on being profligate with its QEs or whatever, look at this recent glaring bullshit going on, and nobody in the media is trained to talk about it, and therefore, most people on Twitter will not talk about it. That if highest inflation happened in America, the rest of the nations were still lagging. So by the inflation pricing theory of currencies, dollar should have weakened. Or if America started raising rates aggressively ahead of all others, then the interest rate parity model would have demanded that dollar should go down. But not only did the dollar keep going up against the euro में अच्छे खासे टेक्निकल पैटर्न तोड़ताड़ करके और नीचे एक नया स्लाइड बना दिया, जीबीपी को बिल्कुल फोड़ दिया, जबकि उसमें बहुत ज्यादा स्ट्रेंथ था. नाउ Canadian dollar and Australian dollar peaked out and collapsed. All four currencies together seldom happen. That very ferocious coordinated movement in the last month of April, dollar index had a climactic up move from opening at 98 on the April bar of the chart. It swung up to 104.5, 6% gain in a single month in the face of glaring inflation, glaring interest rate hike, and rest of the nations. Actually, there's a process of exporting inflation. God knows how central banks are getting manipulated. Please don't laugh at me. In the absence of any explanations, जब सर पीटने का मन करता है ना कि क्या दादागिरी, तो इवेंचुअली वही याद आता है जो हमारे फाइनेंस के प्रोफेसर ने एक्सएलआरआई में बोला था कि बेटा जितने भी मॉडल्स मेरे से सीखने सीख लो, पर जिंदगी में एक चीज याद रखना, जिसकी लाठी उसकी भैंस, चौथो बल है दाम. फाइनली द पॉलिटिकल एंड मिलिट्री पावर विल डिक्टेट मार्केट्स. तो करेंसी मार्केट में जो बड़ा मैनिपुलेशन हुआ, कोड Australian dollar and US dollar together collapsing. And for last 10 years, if Swiss franc was going on sideways, कुछ नहीं कर रहा था स्विस फ्रैंक. सारे वर्ल्ड के माफिया का, गुंडों का, पॉलिटिशियंस का, सबका पैसा सारे हरामखोरों का पैसा स्विट्जरलैंड में. It's a pact. It's a tacit pact in last 500 years with all the warfare going on around whole of Europe. This landlocked nation never had a bullet fired, and everybody, it's self-interest of everyone to keep that currency stable. तो सबका पैसा एक्चुअली प्राइवेट पैसा 2 नंबर का खाता सबका स्विस फ्रैंक में डिनोमिनेटेड है. एंड लुक एट द दादागिरी ऑफ डॉलर दिस टाइम. The Swiss franc was forced out of the 10-year range. And the 10-year range was absolutely like the ECG of a dead man. And what a whacking uptrend came in dollar against the Swiss franc. And now that largest decline on the dollar against the Swiss franc has also happened in the last 10 days of May. So the dollar was taken into a new high, the dollar index, above the March 2020 low. Why it was done and what it has achieved? See, Fed will shrink its balance sheet. Fed will also raise rates. Fed will also pull out liquidity. तो मतलब क्या Fed को वही वाली बीमारी है क्या कि the foot in the mouth disease या आ बैल मुझे मार? Fed will play the game very tactfully. You raise rates also, you pull out liquidity also, and you have to reduce your balance sheet. What does the Fed balance sheet reduction mean? Fed ने जो हेलीकॉप्टर से छाप छाप के पैसा फेंका है, और जो 2008 के क्राइसिस में इवन ऑरेंज जूस एंड लंबर स्टॉक्स वे टेकन एज अ कोलैटरल, एंड यू नो Z ग्रुप स्टॉक एंड Z कैटेगरी बॉन्ड्स, एवरीथिंग इन द वर्ल्ड, कुछ भी कागज का टुकड़ा नाम के लिए खाली कागज साइन करो, पैसा ले जाओ. So Fed's balance sheet has the most rotten assets also. It is the largest balance sheet in the world. If incessant interest rate hike will happen, Fed का तो balance sheet ऐसे ही collapse हो जाएगा. So a lot of talking will be done, different type of walking will be done, there will be lack of coordination, there will be movement of coordination. These things, this part what I'm talking about, if this room would be full of a lot of bank, treasury side, currency traders or large corporate FX traders, they would have really been cackling at this. And the Fed has to reduce its balance sheet. It will do it in steps and in style. ये थोड़े है कि स्कूल मास्टर ने ब्लैक बोर्ड पे लिख दिया कि हिमालय से उतर के गंगा के मैदान में, गंगा सीधा बंगाल की खाड़ी में जाती है. और एक बच्चे ने बोला सर सीधा थोड़े जाती है, वो गंगा अपने मैदान से होते हुए उत्तराखंड, उत्तर प्रदेश, बिहार और बंगाल के रास्ते से जाती है. तो स्कूल के मास्टर जी ने बोला बेटा स्कूल मास्टर हूँ, इतनी पगार में तो गंगा को मैं सीधे बंगाल की खाड़ी में उतारूंगा, इतना टाइम नहीं है मेरे पास. तो स्कूल मास्टर ये जो सीधा बंगाल की खाड़ी में गंगा को उतारता है, वैसे थोड़े फेड इतना सारा अनवाइंडिंग करेगा. उसको सोचिएगा कैसे करेगा. इफ आई गो इनटू दैट आई मिस माय मॉर्निंग वॉक. So let me jump to the next point. Since I'm an animal of chart reading, those who may not believe in it, I cannot persuade them, and those who do believe in it, I did post a very detailed video of why I think dollar index, we are right now calling it 105, we called for. और वो फापड़ू छाप बहुत सारे जो फ्रॉड क्वांट्स हो गए ना, वो डबल मीनिंग दादा कोंडके का जैसा ट्वीट लिखने वाले बहुत से लोगों ने लिखा मार्क दिस लेवल ऑफ 105, इट्स अ मल्टी ईयर हाई ऑफ 10 ईयर हाई, दिस नंबर विल बी डिस्कस्ड मेनी टाइम्स. और मैंने लिखा घंटा बाबा जी का, यहाँ से हो गया टॉप. ठीक है, एक राउंड टॉप राइट हो गया, उस पर आई शुड नॉट थंप माई चेस्ट टू मच. So we called for a move back to 99 with some rebound after that, and then in that rebound the wave counts will see, then we will re-emphasize our call. We gave an advanced warning. Dollar index is headed back to 88 over the next 18 months. I am not yet triggered that call. I have kept as a warning call. पहले से prepare करना पड़ता है minds को. Should this thesis work out, despite all of these very turbulent news ticker and very turbulent logistics and very turbulent geopolitics, a serious up move in equities along with turbulence, it will not be a smooth market जहाँ कुछ भी ले लो पैसा बन जाएगा. And I'll come to the flavor. I'm noticing how this turn is beginning to work out. Again, I can go wrong and one will have to take a stop loss. But बाप बड़ा ना भैया, सबसे बड़ा रुपया. पैसा अगर कीमती होता जाएगा, कितनी ताकत लगा लो, कुछ भी ज्ञान लगा लो, valuation and values will get crushed. And if money is going to get cheap again, the Japanese yen, which always acts as a penumbra of the dollar. In a shadow, you have the umbra and penumbra. Penumbra is the faint part of the shadow. For last 30 years, this relationship existed. For everybody who swears by quants, सब लोग गायब है, कोई देखता नहीं काम की चीज को. ऑडियंस जो है ट्विटर पे क्वांट इलिटरेट है. सो 12th स्टैंडर्ड का रॉन्ग स्टैटिस्टिक्स लगा के लोग बाबा लोग बना हुआ है बहुत सारा लोग. 30 years what the Japanese yen was doing, it was acting as the concubine of the dollar. If not the penumbra, a concubine is a simpler word for you. If the dollar would appreciate against the other 5 currencies in G7, Japanese yen and dollar being out, so there are five more currencies left. If dollar is appreciating against them, Japanese yen will get even stronger. Japanese yen was acting as the shock absorber. Japan does not have a military of its own after the Second World War. That fact no longer gets reported in media. Japan is tacitly controlled by the USA. Japan is the punching bag of America. But this time around, the desperation to export inflation. If inflation is so high, dollar should go down. If dollar goes down, the purchasing power of the dollar goes lower. So Americans will be paying much more dollars to import the same goods, and they'll receive the much lesser dollars for exporting their goods. So to export America's inflation, to kick that inflation out, the political kick out at extreme manipulation, where there are gives and takes between central banks. So exporting of American inflation happened. The logistics supply side bottlenecks inflation percolated all over the world, and inflation became a shared burden on one hand, which is absolutely fair. A large major economy or a 65% market cap will only suffer inflation. In that topsy-turvy world, a crash would have happened worldwide. Let everybody share the burden. Now, if dollar index thesis is what I've laid on the table, I'll keep updating it on Twitter from time to time or on TV. So far, one round right. Let's see how. Now while the stock markets have all made a breakout today, from 4600 down to 3800 line on S&P made a final breakout today. Equivalent trend line breakout on Nasdaq has happened today. और ये जो हमारी निफ्टी भी जो ना मुंह फुला के बैठी थी, आज उसने भी फाइनली एक माइनर ट्रेंड लाइन को तोड़ा है, तो बना है प्राइसेस में. So next point, what I'm noticing within the intraday patterns and from which we build the fractal over fractal and patterns over patterns on various time scales, the hesitation the hesitation may remain throughout this up move. 17,200 is the next, 16,600 उसके बाद 17,200, उसके बाद 18,600 की लोग बात करेंगे. और मैं आपसे एक बेशर्मी की बात आज करना चाह रहा हूँ, not because I want to stand apart, but we are all friends here. We come to open our minds and talk to get criticized in a fair, professional way so that I can also go back and refine my thinking. I'm not calling for 20,000, but I have a lurking fear in my heart since yesterday कि अगर बेटा ये 20,000 की चाल निकल गई और तू इस भेड़ चाल में बैठा रह गया, तो मंदी में तो पैसा तोड़ दिया. झुंझुनवाला जी का 55,000 करोड़ का पोर्टफोलियो था, गिर के 38,000 करोड़ का हो गया. मत्थे भी मार दिया तो 3,000 करोड़ रुपया मत्थे में कमा लिया. नेट घर में 42,000 करोड़ रुपए की वेल्थ बची 55,000 वाला. तो मंदी के अंदर सबका मुंह काला, तेजी में सबका बोलबाला. घूम फिर के मंदड़िया भी तेजी में पैसा कमाएगा, और मंदी के अंदर में मंदड़िया भी पैसा नहीं कमा सकता, क्योंकि जिसके पास पहले से नोट है, कुछ तो घर में पोर्टफोलियो होएगा, नंगा बुच्चा थोड़े है. So from all this disconcerting unison of negativity, all the negatives parameters in favor of the bears are all on the table. I'm not calling this as research. I'm not calling this as anything more than a conjecture. What prevents Putin to go and pick up a $30 billion position and one day say, अच्छा बेटा बहुत हो गया, तेरे को बहुत लेसन सिखा दिया, आजा गले मिल ले, डॉनबास जाने दे, हमने बहुत बॉम्बिंग कर दी. Outstretched it seems like, but history is full of episodes that ask us to be aware कि पैसा है, सबको प्यारा है, हर इंसान के बॉडी पे पसीना आता है. In 2008, when the US government bond auction was failing, $80 billion of bond auction, 5 minutes left, the world was on tenterhooks. The treasury bond auction will fail means the whole world will go into a crash. 60 seconds left, and everybody is ready with a sell everything button. The world, the risk was pressed on the jugular knife. The big knife of risk was pressed in the jugular veins of every large hedge fund and every trader. And I was in the trading desk of second largest hedge fund in Asia, running $1 billion positions for them. फट के लोटा फ्लावर होके हाथ में आ गया था सब, राइट. बट जस्ट बेस्ड ऑन चार्ट पैटर्न्स आई सेड हनुमान चालीसा करते रहो, स्टॉप लॉस डालो. लास्ट 60 seconds में two numbered accounts from Cayman Islands came and took the entire $80 billion bid, and nobody till this date knows 2008 का $80 billion आज के $500 billion के बराबर है. So इतिहास गवाह है. Very mystical things also happen in markets. I'm not saying this will happen, that very soon suddenly one day we will wake up, कहाँ गया वॉर, दोनों ने पप्पी ले ली. वो रिस्क है, प्रोबेबिलिटी उसकी कुछ भी नहीं है. तो वो एक्सट्रीम पॉइंट पे हम आते हैं. मीडियोकर जो सेंसिबल पॉइंट है, लास्ट 5 रेट हाइक साइकिल में स्टॉक मार्केट ने नेगेटिव रिटर्न, नेट रिटर्न नेगेटिव नहीं दिया है. Assuming this rate hike cycle lasts for next 18 months, we have already collapsed from the beginning point of that by 20%. This markets to go to a new high is not at all an oddball thinking. लास्ट 5 रेट हाइक साइकिल्स इन लास्ट 40 years, फ्रॉम जिस पॉइंट से स्टॉक मार्केट गिरना शुरू हुआ रेट हाइक साइकिल स्टार्ट होने तक, by the time the rate hike cycle ended, stock market was substantially higher. And this is fair and sensible economic reasons. If this world needs free money to be, ये पेटीएम जोमेटो में तमाशा करने की बजाय आप सेंसिबल जगह पे कैपिटल डालोगे ना, जब पैसे की इज्जत नहीं है तो पैसा कैसे बनाओगे? Lot more can be said and discussed on this, and the history is valid. It's not a spurious correlation that rising interest rates and positive stock market returns have always coincided. There's a fair economic rationale behind it. So that statistic is with us. My chart patterns are together with us. And now coming to the some insights on where some money could be made, where I will surrender this stance of 20,000 पॉसिबल है, 18,000 बिल्कुल टफ नहीं है, 17,000 की तो तेजी बनती है। अभी 17,000 की बात करेंगे, 17,000 के ऊपर आगे की सोचेंगे टुकड़े टुकड़े में, और पलट गया साला 3 दिन 4 दिन के भाव के नीचे बंद आ गया, फेंक देगा सब कुछ, फिर दोबारा नया दांव लगाएगा। अभी क्या तमाशा हो रहा है लास्ट 10 दिन से हमारे लोकल स्टॉक्स में, देखो आप। रिलायंस हैज बिकम द इंडेक्स। रिलायंस को लास्ट राउंड में जब 18,200 लेकर गए, रिलायंस वाज द लोन सुपरस्टार, बाकी सब स्टॉक्स को भीतर भीतर दीमक लगा दी। जहां रिलायंस को धमाधम दे दिया, 15,700 आ गया। रिलायंस को स्विंग वापस दिया। एचडीएफसी बैंक को पहले तोड़ के रखा था, एचडीएफसी बैंक अपने वनवास से बाहर आ गए। इस गिरते बाजार में भी सफीर ने हीरो मोटो में पैसा बनाया, हमने बजाज ऑटो में बनाया, टीवीएस में बनाया, अपोलो टायर में बनाया। तो दुनिया भर के ऑटो स्टॉक से जिन्होंने चुपके चुपके में 20% की रिटर्न दे दी, बैंक्स गिरे नहीं। आपने आईटी स्टॉक्स की सतेवड़ी कर दी, सीमेंट के स्टॉक्स को डबल बॉटम पे ले आए, वो भी ऊपर से 30% गिर गए। बजाज फाइनेंस, बजाज ऑटो 40% गिर चुके हैं। दुनिया की एनबीएफसी का ये भाव हो गया कि खोपड़ी में किल्ला ठोक दिया है। सो यू नो व्हाट हैज हैपेंड इज देयर हैज बीन अ डीप कैथारसिस अक्रॉस सेक्टर्स एक्सेप्ट ऑटो एंड बैंकिंग, एंड ये रिलायंस बाबा को संभाल के रखा हुआ है। बाकी तो सारे ऑयल एंड मार्केटिंग कंपनीज को भी पेल पाल के जीरो कर दिया। खाली एक चेन्नई पेट्रो को और अपने वो एमआरपीएल को सुपरलेटिव रिटर्न्स दे दिया क्योंकि इन्वेंट्री गेन्स आ गया। ऐसी कौन सी तकलीफ थी एचपीसीएल की बैलेंस शीट में, और ये जो एक्साइज कट आ जाएगा तो उसके कारण एचपीसीएल को इस तरह से पनिश करेंगे। तो जाने भी दो यारो, मूवी का जो लास्ट सीन था ना, कि जिसको जो मिला उसको मार रहा है, अपना पराया उससे मतलब नहीं, उठा के मारो। वर्णन करनी है, रोल ओवर नहीं होएगा, पैसा भरने का है। उठा करके कोई ने ठोक दिया आईडीबीआई बैंक, जो सबसे बड़ा आईडीबीआई का बुल, उसने नीचे 33 रुपए तक दबा दिया, जो 100 रुपए की बात करता है 50 रुपए के भाव से। सो मेनी throwing in the towel, the deep catharsis is across the B group. I still am not able to find patterns where I can say this is the list of 50 B group stocks जिसका बॉटम हो गया है। 6-7 स्टॉक्स आज लगे कि जिनका बॉटम आया है। तो what might happen is the largest stocks in each sector may keep buoying up the nifty initially in a noisy manner, and the deep catharsis can still continue for next 3-4 days. अब जब लोगों का माल कट जाएगा नीचे में और इधर इंडेक्स तो ऑलरेडी ऊपर हो गई, दैट डिसोनेंस क्रिएट्स दैट बिफोर पीपल विल गेट बैक इनटू फोमो, a very very schizophrenic kind of situation will have to be faced by people. It always happens at all tops and bottoms, almost all the time. कुछ और नया flavor लगा देंगे, कुछ और कर देंगे. So perhaps if this is the kind of script that plays out and then we reconnect again, that the smaller stocks will still suffer for the next 3-4 days. रिलायंस को टान देगा, एचडीएफसी बैंक को खींच खांच दिया जोर से ऊपर। अगर आपके अब मारुति को 300-400 रुपया ऊपर बढ़ा के ठोक देगा नीचे तक, जो ऑटो में करेक्शन ही नहीं हुआ। आईटी स्टॉक्स को जो इंडिया में भी, मतलब बच्चे की जान लोगे क्या, नहीं जान ले ली, खत्म कर दिया। और मेरे को लगता है ये इंडियन आईटी स्टॉक्स भी जो आज टोटली रिटर्न ऑफ है, 30-30% यहाँ से लार्ज कैप्स भी बढ़ जाएंगे ना, विप्रो, इन्फोसिस। आई एम नॉट कॉलिंग फॉर इट, बट सी आई एम I'm basically a tactically a trader. मेरा सौदा बढ़ते जाता आगे, मैं उतनी ऊपर की जगह सोच के चल रहा हूँ। मेरे पास वो फंडामेंटल का एरोगेंस नहीं कि 30% बढ़ ही जाएगा। ब्रह्मा जी को खाली मालूम है कल क्या होने वाला है, अपन तो दांव लगा सकते हैं, पर उतनी जगह ऊपर है, नीचे में कहाँ है। जान लेनी और 5% कटवा लेगा, किसी की लिवरेज पोजीशन है। तो एक बार बाजार को यहाँ से घूमने दीजिए इंडिविजुअल स्टॉक्स में। चाहे आप मेरे जैसे डीप टेक्निकल्स नहीं करना चाहते हो, सिंपल लकीर खींचिए ऊपर से हाईएस्ट प्राइस से लोएस्ट प्राइस तक, वो ट्रेंड लाइन टूटती है, मंदी का सौदा काटो, तेजी करना है तो तेजी करो, नीचे का जो भी लोएस्ट भाव से स्टॉप लॉस लगा के कीप इट सिंपल। So I think initially one large stock from each sector will start, buoying up the index, and the index itself will not give very smooth patterns. There will be very large fluctuations reflecting the very very loaded up news tape And that is the kind of patterns that are already visible on Elliott waves. It might be an irregular B wave that can even go to a new high, and still you'll not get a feeling of the bull market. और उस वक्त हम 18,700 18,800 के अंदर में रोएंगे, वही ट्विटर पे रोना धोना चालू होगा, पोर्टफोलियो नहीं बढ़ा, इंडेक्स बढ़ गई, और इंडेक्स जब ऊपर से करेक्शन देने लगेगी लास्ट में, जैसे डॉलर इंडेक्स में क्लाइमेक्टिक अपमूव आया, इसमें भी आ सकता है. सो लेट मी सम अप नाउ. I cannot say with confidence the final bottom is done, but we have made a double bottom here, almost a double bottom. It's not a double bottom, it's an almost a double bottom. Well, that's my exotic theory. Those who follow Elliott waves may nod their heads in deep appreciation of 30 years of work. For others, it might be abracadabra bakra hai. तो ठीक है यार, whichever way anyone takes it. But a more than 90% retracement, and if that market survives and reverses back, वो ऊपर कहाँ तक जा सकता है उसका अभी से अंदाज लगाना और उसके ऊपर लिमिट बैठाना गुनाह होगा. जाएगा नहीं जाएगा, इवेंचुअली वापस टूट गया 15,700, छोड़ देंगे. कहाँ तक जाएगा नीचे? 15,000, 14,900. तो पोर्टफोलियो का जो हाल हो चुका है, इंडेक्स को 1,000 पॉइंट घटा देंगे और वहां से आपके बजाज ऑटो, हीरो मोटो, टीवीएस को पकड़ो भाई. हमारे को कितने स्टॉक्स की लिस्ट ऐसी दिख रही है जो और 2-4 दिन में पैटर्न्स कंफर्म होते हैं. मेरे को लगता है दिस इज अ रीसेट, सेकंड राउंड ऑफ द मार्केट. The dollar index reset to March 2020 lows. There was an innocent man could make money. पढ़ा लिखा आदमी शुरू में पैसा नहीं कमा पाया. अब जो इनोसेंट मैन है वो आड़े तिरछे काम करके पैसा खोएगा, और यहां से लेके पढ़ा लिखा आदमी बहुत बड़ा पैसा कमा सकता है. इतनी बड़ी तेजी अभी भी चलेगी. इट विल बी सिलेक्टिव, इट विल बी रोटेटिव. कभी लार्ज कैप्स चलेगा, कभी सेक्टर लीडर चलेगा, उसके बाद अक्रॉस द बोर्ड पूरा सेक्टर चलेगा. दिस द 2020 to 21 was when boys made money and men kept sulking. I think the time has now come. Boys will be shown their way back that they are only boys. Real men will make a lot of real money now.
Thank you, Sushilji. Thank you so much for such a deep insight. Thank you so much. If you can stay back for 10-15 minutes, that will be great, right? So,
I
coming,
will love to यार, पर मेरा जो जिम ट्रेनर है ना वो मेरे को धक्के
so
मार के निकाल देगा.
be here till 11 p.m., right? Then you can leave, right? So, final concluding remarks, I will take it from you at 11 p.m.
अगर आप शरद भाई को भी बुलाओ, सी he is a very deeply studied man. He has very strong bearish views. It's good to hear contrarian views or opposing views. We will not fight. We will not make it sentimental. We'll keep it a professional coffee table conversation. Sharad bhai, if you can please accept the mic, and Prakash ji, if you can get him on the podium.
I cannot locate his Twitter handle, right?
It is simply Arabica Trader, @Arabica Trader, ARABICATRADER.
I cannot. I
I'm
cannot
sending
see.
you his handle in the DM. In the meanwhile, you can start wrapping up.
Yeah. So, Safir ji, so I have 3-4 questions to you, Safir ji. Yeah. So the question which I left this. So in this entire correction, banking did well, right? And what is your current take on banking sector going forward from here on?
So my view on banking continues to not change, which is the fact that according to me, the leadership in banking has long transited to ICICI Bank, and ICICI Bank has been the strongest banking stock in this entire market for the last 2 years. I don't see that changing. In fact, I see that position consolidating, and at the same time, I also feel that State Bank of India will be resilient. There is value in HDFC Bank at this price, but I'm not personally. And if I was a fund, I would have bought HDFC Bank without blinking an eye. But as an individual, I've decided that I do not want to buy 5 lakh, 7 lakh crore market caps. Simply because if the market has to bounce back 20%, I would rather make that 20% owning something which is cheaper, and where the stocks are being punished for sheer lack of liquidity. For example, in a small cap company, which is, say, for example, 1,000 crore company, the selling of some 5,000, 6,000, 7,000, 8,000 shares is also causing stock prices to fall 10 to 15%. And I would rather look at those companies from the futuristic perspective of what they are doing. Some of them are in manufacturing, for example, and I would rather personally position my money there. Of course, like I said, it's very different for an institution. It's also very different from a temperament perspective, because if the market erodes, some of these guys will not erode. and to that extent they may safeguard you from the fall. But if I'm looking at from a long term perspective, which is what I should be doing, then I find that I would rather be buying some of these really small and mid cap companies. In fact, let me tell you that I will tweet on this. There is a very good article that I read. If at all the market is to bounce back, and I'm not talking about India, I'm talking about global markets. Statistics show that the chances are going to be much more favorable for the small caps to bounce vis-a-vis large caps, because the way globalization is, it is like, I mean, I'm just giving example. I don't own this company, but see, one company, for example, like a Shelly Engineering's fortunes were changed when IKEA came. One company which I do own, RACL's fortune was changed when say a BMW or a Kubota gave them order. Escort's fortunes change with one Kubota sort of deal. So what happens is that there the size of the deal. If you look at some of the, for example, IT companies, and you bag a deal, they are not sitting with billions of dollars of orders to sustain. Their fortunes change, and that is exactly what has happened in some examples. So I would bet more that on the fact that I want to buy. It's very clear I want to buy something that at a bare minimum should give me a 20% sort of a return vis-a-vis inflation rates now of about 8%. So if I'm not even going to get the 20%, then I'm not going to sit and experiment in the market. I'm not going to buy a stock just because it's not going to fall. I'll have to buy a stock because I want it to go up.
Mhm. Great, great, great. So, an overall take on your overall IT sector and mainly the mid cap basket, which has corrected almost like 40-45% from the top. So, what you are doing there, right? Are you buying or are you looking to buy? What is the stance there?
Yeah, so again, I would not buy the very large cap IT stocks, because the large cap IT stocks have many reasons. For example, do not forget that there is an overall stress in the large cap IT stocks in the United States of America, and those companies are themselves have been marked down. So the benchmark has been disturbed. You cannot have a situation where some of these very large giants are at 15p, and Indian companies are still commanding a 30p. And they're exposed to the same market, they're competing in the same markets. So whereas in the case of small IT companies, and when I say small, they actually include medium, the fortunes are very different. Because and there are many examples of this. If for example one group came over and took over, say, an Emphasis, and was able to transform that company, or for example Mastic in just 2 or 3 quarters was able to move up, or you had companies like KPIT and so many other examples, Sonata, and so many examples that were discovered. So the correction that has happened has been severe across all of these, and if I have to park my money, I would be looking at some of the mid and small IT companies. But like I said, the focus is not right now limited to banks and IT. I think a lot of money will be made by buying manufacturing.
Mhm.
And a point, I forgot to say this, but if you go back into my calls in February, I had also indicated that apart from the examples of Hero, TVS, and others, the real theme to play is the MNC manufacturing in India. I bought a basket of 5 MNC stocks that are focused on manufacturing in India. I'm not saying MNC per se, MNC is focused on manufacturing in India. All the 5 stocks have beaten the market. All the 5 stocks are up.
Okay, okay.
So now what is happening is that theme I'm not going to let go. But at the same time, a lot of Indian manufacturing has corrected, and particularly, like I said, on the small caps and the mid caps, and I would be more inclined to consider buying that. And also, the government focus is very clear. The government wants to boost the small and medium enterprises. It's very clear that they want to boost them in every respect, and therefore, to that extent, even from a political perspective, those companies are much more geared to do well.
Mhm. Okay. So, given this auto space is overall doing fine, so are you, having any view on auto ancillary space? Like,
So in
because
the auto
that is
space,
also a part of a larger manufacturing basket, if you say so.
yeah, I have exited my auto positions because I do believe that in auto the complexity is going to be way more. The
Mhm.
problem, I'm talking about auto, I'm not talking about ancillaries. In auto, the problem is that they have to go and compete back in the same market where all the players are competing. And I was seeing a very interesting interview on Monday on television, that the price to earning ratio of a BMW or a Mercedes is only 5.
Yeah.
And these companies have already tested. Some of these companies have already tested the migration to e-vehicles. So when you are having the leaders in the world that are actually growing, and these companies have grown in the last 2 years, when after growing they're at 5 P's, I do not want to go and own auto stocks that are at some humongous P's. For example, in the EV sector itself, there may be a competition between 10 players, and those 10 players will include a lot of new emerging companies, as it has happened. For example, and just as an illustration, we saw that in the bus segment, JBM Auto came from nowhere, and JBM Auto became a very sizable player in that segment. For example, in Greaves Cotton has a subsidiary that is selling more electric vehicles than the two-wheeler companies. So I'm not trying to talk about these stocks. What I'm saying is that there'll be new players, and I don't want to bet on who's going to win the race and who's going to cut prices and who's going to do what. I would rather play themes that are ancillary to this. For example, there may be auto companies that will provide to all the 10 players. Now, that guy who provides to 10 players is a far better story than to decide which one of the 10 is going to win the race.
Yeah, so mainly on the shock observer side, or like companies like Minda and all, right?
Yeah, I mean, you can take many
Yeah,
examples.
yeah.
I bought a company that is not necessarily Minda Industries, but another company where I believe that the entire cycle is going to turn around for that company for many years to come. They are on the lowest part of the cycle. Their entire ratios are all, sometimes people look at, this is only for the benefit of investors. I'm only trying to share an education here.
Correct.
Sometimes, all of us, even I used to make these mistakes. We look at return ratios and say that we reject this company because the return on capital is very low, or for example operating profit margin is very low, or for example the cash flows have been impacted, but you do not realize that they could be at the verge of a turnaround. And if you're at the verge of a turnaround, all of a sudden an operating profit margin of 2% can become 10%. The entire cash flow can change overnight. The return on capitals can change from single digit to multiple. If you actually look at the data bank that is available right now of listed corporate India, our return on capital employed is at one of the lowest that I have seen in more than a decade now, because the cost of capital has gone up and the margin squeezes have happened, etc., etc. So a lot of these companies will move up the curve, and there the actual double bonanza will happen, which is, one is the top line growth will happen, and second line, the bottom line growth will be triggered off. Whereas in an ultra efficient company, there will be no bottom line growth. So I'm screening my portfolio to look at the probability of finding some good quality companies where I find the ratios are today not supportive, but historically these companies have done well, or there is a transition that is happening. Like, don't forget, in the last 2 years, many companies in the lockdown have completed very good capex. They have not got the benefit of that capex today. And you are talking about a world where a lot of supplies have got crushed because of China and other factors. So a lot of the world will look at India for the supply of these essential products, and that itself will be a metaphormist moment for a lot of these companies.
Okay, great, great. So, and what is your take on these chemical names? They have also corrected like 30-40%, some of the, favored names. So what is your current take on chemical space, given the valuation has corrected significantly and most of the stocks are, either hitting 6 months or one year low. So can we have a view there, like whether
See,
to
the
invest or not?
chemical companies are of two kinds. There are chemical companies which have, extremely smart managements, and those companies are building competencies of many kinds. I just, as an illustration, let me take an example of, say, a company like an SRF Limited, where the management has a whole pipeline of product launches, and therefore the management is well attuned. And then there are companies that are currently benefiting only from raw materials, where there is no significant advantage to the companies. That raw material benefit could have been triggered by scarcity because of China and other factors. And I think some of those prices have started correcting, which is exactly what happens in, for example, mineral and metal stocks. Some companies are building competencies. Like when yesterday I read, and if you have not seen it, you must, sorry, not read, heard. If you have not heard, I saw an outstanding interview yesterday by Mr. Kumar Mangalam Birla from Davos. He spoke about how he's trying to build his entire business around Hindalco and what he intends to do on that extent. Similarly, Mr. Anil Agarwal gives a lot of statements and he makes a lot of vision known. So when you look at some of these companies, you will discover that these companies have got competencies because they become very large players and lowest cost players in the world. Similarly, the Tata management was, made very favorable comments, except that they were not very happy with the sort of price tinkering. But that may be a passing phenomenon, like I said. On the other hand, there are companies that are, on the chemical side that are doing nothing. You just see the price of one particular thing that they produce, and you say, okay, XYZ price is high, and therefore they should be given whatever earnings, and it's not going to sustain. So you have to make your picks because it's not about what returns you're going to get in the next 1 month. The question is what returns you're going to get in the next few years. When the tide turns, and it is bound to turn, India will be a shining story.
Correct, absolutely, absolutely. So what I'll do now, I'll share my market view for 5 to 7 minutes.
Also, Prakashji, one thing is that we have a very rare person on the call, and you must make him speak. He's a very smart person. His name is Mr. Sanjay Dutt. He
Sanjay, can you?
he's quite a visionary person. When many of us were not even in the market, Sanjay used to write some
Yeah,
very beautiful letters, and I used to really enjoy reading his letters. He's a little bit of a quiet person, but we must request him to speak.
yeah, I'm doing that. Just a second. Sanjay sir, I hope you received my request as a speaker. I've already done that. In the meantime, I'll share my market view in 5 to 7 minutes quickly. So as we speak, right, dollar index is somewhere forming a topish kind of a pattern, and dollar index may fall as Sushil Kedia is saying around 99 or 100, and if that is happening, it will be a decent case for beaten down markets, basically the emerging markets like India, Taiwan and China. So this is one positive for emerging market. The second thing is the Bitcoin is somewhere around 29,000, 28,000 in dollar terms is finding its feet. So if the Bitcoin get stabilized around these levels, then you will not get any further margin call from the other asset classes. This is my base case, right? So if that is happening, so no more further damage from the other asset classes, right? So this is second positive which I am seeing. Third, right now as we speak, there is a decent bounce in US market as well, and I mentioned this on Twitter 2 days back that Dow is showing some kind of a positive divergence on technical charts, and exactly on the similar lines, Dow has rallied some 3-4% from the bottom. But given our valuation, our Nifty 1 year forward earnings has gone down to some Nifty valuation has gone down to 18 and a half times. So whenever in history, if you go by, whenever you buy Nifty stocks or even small cap or mid cap, whenever you buy Nifty forward P around 18 and a half times, and if you have a time frame of 12 to 15 months, as Safirji said, you'll end up making 15-20% kind of a return. We precisely don't know whether we'll fall another 5% from here on. We don't know, but you only invest your surplus money if you have, and have a time frame of 12 to 15 months. And if I speak about few sectors, so I think one name I mentioned on Twitter is Kotak, which did well. Right, in this entire carnage, Kotak did well, and HDFC is also recovering. ICICI Bank is also recovering, and in IT, I have, I think, one of the largest sectoral bet ever. Right, so right now I have an IT allocation of around 34-35%. and mainly into the mid caps, and bought couple of large caps in last 2 days. And manufacturing, as Safirji said, right there, clearly I'm buying some bearing companies and all those, I have positive view there, and some domestic companies as well. Auto ancillary company, I'm betting on them and I'm buying them. Then recently in this fall, I bought one gaming company where too much pessimism, though results were really, really bad. But just for a bounce back of 15-20%, I'm playing there. Bought some pharma names as well because they are debt free. And overall, if you buy serious dip in pharma stocks, 30-40% corrections, history will tell you that you'll be end up making some kind of a money. So to net buying in pharma, buying in IT, buying some selective names in banking, manufacturing, auto, and then here and there some small cap and mid caps name where I'm bullish. I have not a very clear view on FMCG because still the valuations are very, very expensive. Though they may not fall big in this correction, but valuations are not cheap, and these companies will not grow more than India's nominal GDP by any stretch of imagination, right? So they will, HUL cannot compound the revenue growth or volume growth by more than 10-12% on year basis. So and as we know that chart or prices are slaves to earnings. So HUL cannot compound at such a huge base. ITC is doing because that tobacco business is doing well and everything, right? And it was such a beaten down name. So we own some ITC as well. But overall, not a great view on FMCG even after the prices are down and out. So net banking, IT, manufacturing, autoing, these are the four sectors. Nifty is close to the bottom, 5. So that 15,000 round number I gave to you in last Twitter space. But now I'm upping that number. So now my base case is Nifty should now from here on, as we speak, at 16,200 roughly thereabouts. Nifty should not break 15,300, right? So I'm upping that lower band to 15,300. So that will be a good support if you are investing for 15 to 18 months in terms of valuation zone, and rest everything is fine. I think you'll be fine in next 3 to 6 months. So it's a for sure it's not a great time to because there is a lot of negativity around it, a lot of news flow which is it is not easy to comprehend, but you are getting the prices which are attractive to you, the valuation which you were waiting for last 15 to 18 months, you are getting that now. So maybe if you have surplus money and you have that kind of a time frame, you should invest here. So this is the limited view I have on the markets. Safiji, anybody else you want to speak? I think Sanjay ji is not here. So if you want anybody to add me, I'll add them.
No, we can allow some of our
Questions, yeah.
audience to
Yeah.
put.
So any concluding remarks, and then we'll take a question answer, and then we'll wrap it up.
We can also ask Vivek to chip in. Vivek has just released a book which today, according to what I hear, has become a bestseller already. It's displaced one single day sale is more than the sale of Chetan Bhagat. So Vivek may like to share, in a very short synopsis what his current reading is, because his book is a lot about experience. In fact, I'm very looking forward to reading his book immediately after this call. I want to start off.
Full name? His full name is Twitter handle, if you can spell it out.
Vivek Mashrani, he's right. I mean, I can see him right here. Vivek, can you hear me?
Navneet, can you request him to join,
Yeah, sure, sir.
please? Send him the speaker request, please.
Incidentally, I don't know how many, because I really don't know. I'm just saying this out of my ignorance. How many people? I believe a lot of us are also meeting in Goa in the next week. There is some very big investor conference or something there, no?
Yeah, I'm aware of it, but I'm not traveling to Goa because of the right, because I have some meeting. But surely, I wish you
Acha,
all of
I
you all
was
the best.
looking forward more not to the from the investment side, but from the friend side to meet a lot of you and sort of hang out with you guys.
Surely we'll meet surely in Mumbai or Delhi for sure soon. So Vivek, Navneet, can you find him and send him the request?
टिक लगा हुआ है ना अभी देखो वो टिक लगा हुआ है बिकॉज टिक वाले तो अभी सिर्फ कुछ ही दिख रहे हैं वो जो ट्विटर का वेरिफिकेशन वाला
Let me try. Huh? I got Vivek Masrani. Huh? Okay, okay.
यस
Yeah. Vivek, Vivek. I think he's
आई थिंक इज लेफ्ट अभी तो थे वो चले गए होंगे
no problem. So let's start with the audience question, right? So, if any of you have any questions related to markets or the process or what to invest and how to invest, right? You can ask me, Safir sir, anybody, right? Send your query to Navneet. Navneet will add you as a speaker and then you can speak. Navneet, 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 can you hear me? Okay, so you can send your speaker request directly to me. I'll try to add you as a speaker. So we have CA Subham Goel. Subham, you can speak, huh? If you have query, you can ask. Now we have Vivek also. So Subham, you first complete your query, and then we will take Vivek online. Subham, can you hear me? Vivek, can you hear me? You can share your thoughts on the market and on your book, right? Summary of your book.
Thank you so much. Sorry, I was slightly dropped off in between, but thank you so much for share my ideas. So I think, yeah, in terms of market, I was scanning through first of all a couple of core stock charts in my watch list, and broadly since last 2 weeks, I think the kind of falls and the kind of panics in these, particularly some of the high valued stocks, which was after so long I was able to see. So that ways, I think the froth is getting moved up. And even on the other side, I just tweeted even yesterday that the Nifty is just a mirage. Just the fall in Nifty is nothing. Even we have not fell more than 15% from the top as such. But the real fall is happening in the small and mid cap names, and good ones are getting separated from the ones which were just flying because of the news, rumors, and lot of noise around social media. So I think that demarcation is clearly visible. The VIX was also very high in last couple of days, so that way volatility index I keep tracking. If it goes above 20, I generally stay cautious. And today I think it fell by around 9%. So I think until it falls below 20, there will be a lot of fear, volatility, a lot of new investors who have come in last 1 or 2 years. Again, there might be a panic mode because they have never seen this kind of losses happening in the portfolio. So I think it's for good, and as Safirji was also mentioning, even in different sectors and some of the mega trends which are already in place, there are always some players who are like going to get benefited due to this, and they are doing right things in the right way, and it's just matter of time. Again, they will pick it up. So that is the broad view in terms of what's happening right now. I generally don't believe in predicting where it will go after 5 days, 10 days, 1 month. That is not where I'm really good at. But broadly, it's always time to stay cautious and up our research game in times like this, so that we are very very prepared when things turn out and we are accumulating right kind of companies. That is the broad view. In terms of book, yeah, so book is basically addressed for more or less people who are beginning to invest and those who are already investing, both side of audience. So what I've tried to summarize is my journey over last 10 15 years into investing, what all things I've learned from a lot of people, and I'm blessed that Indian investing community is so great that it is very easy to connect, learn, gain wisdom. And what you are doing right now also is like a platform like that where you can easily learn from some of the best in the markets, right? So that way, over the last 10 to 15 years, it has been a wonderful journey where I've learned so many things on investing, and I've tried to crystallize and give a framework to it, because I struggle to find in India any book which is actually giving framework, and I keep talking with a lot of our investor friends who are really good, that you should also write something which gives a lot of wisdom to the participants. So this is just a humble attempt to do that. And the way it has been structured is in three parts. So first is learning about the building blocks, the compounding. So the first two chapters are dedicated to it, around 20 to 25 pages, and it starts with a very very light note, like there is a story of Chatur Champak, Aryan Azad, and Rocking Ranjita, who are discussing about how to go about their investing journey. And then our classic compounding principles and everything starts flowing in. So that's the reason the name of the book itself is You Can Compound. And then second part starts in terms of implementing things, how you can do screening better, how you can understand business models in a better way. So there also I've tried to simplify it. I've done a matrix of return on capital employed and earnings growth, and I've given different mental models in terms of a tree analogy, that think about Mango, which is a company which is high ROC but low growth kind of company, something like Kestrel. And then you have banyan trees which are compounding every single year. Then you have cactus where the growth is also missing, the reinvestment of capital is also missing, that, and the ROC is also pathetic. So those kind of structure I've given. And then I've dissected the entire framework in terms of a machine formula. So you might have heard about Ken Slim. On similar note, I've created a mnemonic called machine, and I talk about competitive advantages, I talk about actions of the promoters and mega trends and lot of these different things. And then finally, the last part is focused on refinement, that how you can think about allocation, because a lot of time we choose stocks correctly, we might be making multi-baggers over there, but if the allocation is pathetic, it generally doesn't move needle in terms of portfolio. And just the opposite way, if we have few losers but the capital allocation is very small, and the winners are having big allocation, you make great returns at a portfolio level. So I've dissected a lot of those things in terms of practical case studies and putting numbers to it and examples to it. And then finally, in terms of risk management, I've covered a lot of things in terms of all these business models, how you should be thinking about selling, right? So how you should think about selling in Mango kind of business where the growth is missing and ROC is high, when you should sell the compounding companies, how to think about risk management. So those kind of parameters I've covered. And then also I've covered a metrics in terms of how much to bet, position sizing, and when to increase your position sizing with a mathematical construct and when to decrease it. So that entire framework I've shared. And finally it is on compounding beyond money, like money is just a byproduct of what we want to achieve in life, what are other things which are important in life, and how you can think about it. So that last entire chapter is dedicated on your karma and how you can do good things, how you can help people, how you can be better version, how you can improve wealth, how you can network with other people and grow together. All those things I've covered in the last chapter. So yeah, that's the kind of brief summary of what I've written so far.
Thanks, Vivek. Huh? So now we have the speaker with the name Ujwal. Ujwal, if you have any query, you can ask. Ujwal, can you hear us? Okay, no problem. Then, Safir sir, this question is for you, right? One participant called Setti Nilesh. He's asking that I have heard him in many spaces that he sells stocks in which he has profit or even sell in loss where he is not convinced. So does he not believe on the thesis of buy and hold for long term, at least for the blue chip stocks? This is query is mainly for you, and then one query is for me that I will address.
Yeah, so Ujjwal, in fact, it's actually the opposite, that I am known as a person who holds stocks for extraordinarily long period of time. That is the reason why, as an example, I will not name that some of my stocks even went up to become 100 baggers, and you will not have a 100 bagger if you are darting in and out of the market. In fact, some of the in my portfolio, at least about 60 to 70% of the stocks I would have held for more than 5 years. So even from that perspective, I actually get put off when there is a continuous churning, and one some of my comments that come on Twitter are just this this sort of an anger that when why do you call a company to be a long term hold if you're going to leave it in 2 years, because to that 2 years is not fair, or 2 quarters is not fair to the management. Now, to answer your query, why do I sell some of the stocks? You're actually looking at you are looking at it in isolation, because you must remember that I'm a diversified investor to begin with. So if I have more companies in my portfolio, then what happens is that I do averaging on the way up. If I'm convinced about the stock and the story is playing, then I will be buying the stock even if the stock price is going up, because that moving up will also be commensurate to the improving earnings of the company, and more level of certainty that is setting in, and the maturity of the management to sort of handle a business that is growing. But on the other hand, if the thesis is wrong, then that wrong does not need you to spend too much of time to deliberate. And I will explain to you in the context of what you're talking. See, the media stock that I bought and I went wrong on, first of all, is a small part of my portfolio because of the diversification and the allocation. Secondly, I had started buying the stock at a price of 30 rupees, and it went up to as much as 70 rupees, and then I averaged at about 62. So my weighted average price of the stock is a function of 30 plus 62 or 64 or something. But what disturbed me about the stock was the complete lack of transparency in disclosing what the transaction was about, because you cannot do a transaction and say that we're not going to talk about it, what is the extent of dilution, etc., etc. So at that point of time, you have to admit your mistake and you say, yes, I made a mistake. And the more you linger on, it will not heal. You have to move on to another stock,
Hello.
which I did. On the other hand, if I look at the exit in, for example, in the pharma stock, see that pharma stock has fallen only 17%, or from the time when I bought it. You cannot see historical price. I have to see the price at which I bought. And the mid cap index is down some 20%. So actually 20, and small caps are down some 20%. So relative to the market, it hasn't fallen. Whereas advanced companies with very good numbers, with far more visibility in what they are doing, with higher cash flows and order intakes, etc., are were become have become cheaper. So it's like I have a 100 rupee note that is worth say 90 rupees, and now I discover that the 90 rupees can buy better stuff. So there is no harm in sort of realizing your mistakes and sort of moving out. But the overall churn in my portfolio from a short term perspective actually is the least. It will not even be probably less than 5% or something like that, even lesser than that.
So this
Okay.
was actually not my question. I
No, no,
wanted.
Ujjwal, this question belongs to Setti Nilesh.
Okay.
I got this message through DM. Ujjwal, you can ask your query now.
Can I talk stock specific?
No, you cannot.
Okay, so I want Safir bhai to tell something on the sugar stocks and the ethanol story, how he feels it will play over the next 2 3 years, given that the government is very bullish on increasing the ethanol blending.
Yeah, Safir sir, you wanna take
Yeah,
this?
so
You have already covered it. You have already covered it,
I've
but
already
again,
covered it when I started speaking, and I see we have been buying sugar. We means me. I've been buying sugar for a fairly long period of time. So, for example, as an example, Balrampur, our entry price was somewhere around 130 rupees or something like that. The story is actually very real to me because that there were so many doubts on the story. Then the tri-party agreement was signed with the oil marketing companies. Then escrow accounts were created. Then Mr. Nitin Gadkari came and made so many statements. Then the issue was that will the efficacy of the cars be impacted because the quality of the blending may not be conducive, and that was also tested. Now India has gone to Davos, where all global leaders meet. And India is actually making statements there that we are one country that created an opportunity during adversity, because when the oil prices were going up, we were started migrating to ethanol, and this is not going to stop. We are going to do more and more. In fact, now they are thinking of even other uses of ethanol. So the question is that this appears to be a good story for now, and sugar company should be construed from the ethanol perspective and not what the price of per quintal sugar, etc. So even in this correction that happened, in fact, yesterday itself, I had indicated, because I want to be fair to everybody, and I don't want to have a view which is contradictory, or which sort of even yesterday I was buying sugar companies, and today some of them were okay, but if they fall, then I will probably be buying. But if the thesis goes wrong, for example, suppose like it's happening in EV, suppose in EV the batteries are exploding, and tomorrow it happens that something is going wrong in a big way, because don't forget, ethanol is an answer to India's current account deficit in terms of the oil bill, but it is not an answer to the environment. It is not an anti-pollution sort of a plan. So till for the next few years, it appears to be fine, and then eventually there will be more environment-friendly vehicles and environment-friendly technologies, and by that time we will see. But look at the long tail. That today you're talking about pollution. You're talking about oil imports. Tomorrow you will talk about the use of this in respect of even industrial use. The government is already contemplating it bringing even for industrial use. And then the third thing is that it also benefits the farmers. Actually, if you see the government, the market reaction to sugar yesterday, it was completely nonsensical according to me, because you are in one sense saying that the government will penalize the farmers only, which is going to be they have just announced relief for the farmers. So I don't think this battle is getting over from a market perspective, and those companies. And I believe I like Mr. Sarogi of Balrampur Chini. He talks. He's an honest guy. He talks honest, and you should see his interview. I think his interview has the answers to your questions.
yeah, he said that we are nowhere, nothing. This government thing is not nowhere connected to us, and we are absolutely fine. I think I heard him right. This is his view. Okay, so Navneet, can you take two, three more questions and then we'll wrap it up?
Yeah, sure, sir. Shubham Goyalji, you can ask your question. Sumesh, you can ask your question or query, whatever you want.
Hello.
Yeah.
Uh, Hi, sir. My name is Shumesh, and I just talking about like I am the one who entered market last year, and I seen like 20% of my positive returns, and now I'm seeing -6% or negative returns. Like, but these kind of spaces are actually giving confidence to us, like there is a better future is awaiting for the new investors as well. But however, my question is like when we are saying about down the line 3 to 6 months, the markets are going to be okay, and we are going to get the looking at the Indian future in this stock market stuff. So, what about looking at the current metal space? Like, are we saying like in the next 3 to 6 months, the metal space also is going to be in good shape, or else is it the good time to uh, 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 take away those losers from the portfolio and make it like the rebalancing stuff? Is it good time to do from the metal stock, or else we need to wait for uh, any future upgrades in the metal area?
So what I will suggest you, right? The first thing to counter the uncertainty is to increase your time frame. That will give you a lot of peace of mind. So rule number one is when the uncertainty is very very high, you should increase your time frame So let's say if you initially you are investing for 6 months or 12 months, so now you should think for 1 year or 2 year or 3 year time frame. So add 1 year to your time frame, then things will become much more clearer to you. Second thing, at what valuation you are investing, because end of the day company has to make money, and after that you will be making money, right? So return on capital employed and interest coverage ratio, all these ratios you have to see, and then you have to invest. Coming to this metal space, right, I have one investment called Tata Steel, right, and which is down some 3-4% from my recent purchase price. We bought it at 1100, it went down, went up to some 1350, now came back to some 1040-50. Valuations are attractive, dollar index is going down, but this government action, sudden government action, is not looking great to me, but the prices are so cheap. But if you ask me, I'll be exiting Tata Steel in any 10-15% rally, and then I'll review the results of Tata Steel for next 2 quarters, because they have already taken lots of export orders, most of the Indian steel companies, and the buyers will not pay those duties, to be honest. So it will be an indirect, if whatever the assessment I have, so it will be a direct hit to the balance sheet of the companies, like all the steel producers. So tough time next couple of quarters, and then we will review. But in uncertain time, you have to increase your time frame, you have to do your homework, and don't buy any company which are down 50, 60, 70% just because it is down. See whether
Hello.
the earnings are coming, see whether the earnings are coming or not, and if the earnings is clearly visible to you and the company is reporting revenue growth more than India's nominal GDP, if I repeat, if company is reporting more more revenue growth than the India's nominal GDP, then your company selection is right. And if the profit growth is also greater than 12-13%, then you are fine. If the return of capital employed, if you are not a contra type investor, then the return of capital employed has to be greater than 13-14%. Then you will end up making money, whether the global markets are good or bad, and if you have a time frame of 2 years. So this is the limited take. Now
Hello, hello.
yeah,
Yeah,
you.
You can ask your
Yeah.
question.
See, this is not just a question. I've been in this market from 91 and I belong to a district which is the second largest tea producer in India. And also, I'm from Coimbatore. This is Konur and Coimbatore. Well, I'm quite impressed with the speakers here. And I also have another point which we read today, that Shell, the large multinational company which is into oil, is looking for an Indian group of companies to sell its stake in LPG in a Russian company. And also, India is buying a lot of cheap Russian oil. So, if this comes, I think this will be a game changer for our markets and for our inflation and a lot of things to come. Now, if I look at tea in general, Sri Lanka has lost out in the tea export. There's a lot of purchasing for Russia happening in the tea sector. Yes, there is a slump at the moment in the textiles, but I'm sure, I'm not much into technicals, but I'm sure the cycle is changing and there will be specific companies which are going to do well. Again, if you look at the oil companies, the GRMs, the refineries, the gross refinery margins are looking up. That's why you have seen MRPL, Chennai Petro, and so on coming out with they will come out with good numbers. So I do agree that we have seen the bad things behind us, and stock specific we should do well. I hope this is a right opinion. Thank you so much.
Thank you. Navneet, next.
Anil Nagpalji, you can ask your question.
Sir, have been a follower of your spaces, including Safir Bhai, including Prakash ji. Have been trying my level best to keep out of the panic, but obviously panic is striking. Is it better for new investors who have been there for the last 1.5 year to and have read quite a few books on psychology, on equity markets and everything, still to go back with further new investments rather than going into direct equity? Should we go into mutual funds, and preferably what mutual funds, in the sense small cap, mid cap, or large cap mutual funds? This is my question, sir.
Safir sir, would you like to?
See, Anil, first of all, you have to ask yourself the question that why are you feeling jittery? Because that is a very personal question. See, I can be jittery because I'm overexposed to equity. I can be jittery because I'm risk averse. I can be jittery because the money that I lose may be material for and may impact my life in some way. And I can be jittery just because I don't have the heart to lose. I mean, there are certain people who may be very well to do in life, but they cannot see even a little bit of erosion.
Sir,
Once you have,
basically it is because quite a few experts asked us to go into cash, to pick it up at a better price when the market settles some bit, or some better signals come out in the market. That was the only reason to get out of the market, and have been a avid reader and studying for the last 1.5 years this whole market.
yeah, so I'll tell you something that from my personal experience, I entered the market with no money because I was a student studying in a college with had no sort of funds, and I can tell you that people who leave the market and keep coming back to the market. I'm not talking about technicals because I don't do technicals, but people who leave the market and keep coming by markets never create wealth. To create wealth, you have to, it is not a game of being all or nothing. You of course you can reduce your positions. If you're 100% invested, you can go to 80, you can go to 70, or you can go to whatever percentage you are comfortable, and that may be fine because when the market corrects you will have the money to invest. But do not forget that most of the people actually who remain invested in market because they have selected their companies well, and who are able to brave the downtrends, even if they do not average up, or they suppose they don't have funds, usually end up doing far better for multiple reasons. First of all, their temperament remains intact and they start thinking long term. Second point is, it usually when you get out of the market, it is very difficult to re-enter the same scripts. You sometimes let go of good companies just because you want to pursue the next best, and that is not going to be an easy choice. Third, it's not tax efficient at all. And fourthly, there is a sense of false illusion. I will give an example that if I only sell, say, 5% of my portfolio and the market falls, it gives me a false illusion that I'm getting things right. And it makes me more complacent to making errors than not. You have to be extremely disciplined. There are very disciplined investors who get out of market. They are very, very disciplined. They'll, for example, they'll not get into the market. They'll have a 90%, 80%, 70% threshold limit. But let me tell you, everybody in this world is not Warren Buffett. And I have not even found one person who interprets Warren Buffett rightly. Because Warren Buffett does what Warren Buffett only understands. And what he understands is that he only understands to buy when things are. It's not that he sits on cash. The businesses he's buying are generating enough of cash for him, and he sets his period. Now, take an example of Warren Buffett in this lockdown, in this market meltdown. Warren Buffett has actually increased his allocations in equity, but he's not commenting on where the market is going. He says, even I don't know. So what will happen is, if the market, even assuming the market goes down, he will have enough money to deploy even next year, and maybe he'll have 3 years, 4 years of underperformance, which is what happens, and then 1 year of a market crash that he will make up. So in market, it is important that when the crashes happen, we are able to survive first. Thriving is later, and you survive when you are able to have past profit. Or if you're sitting with a company that has become 5 times and it has a correction, you don't feel as bad because you knew it went up 5 times and you knew it was going fine. See, that's what happens. People come on Twitter repeatedly saying, if you had bought this script and you had held it for so many years, it had been worth so much. But in reality, how many people do this?
Yeah, true, absolutely. So, yeah, absolutely. Thank you. So, I got one question like, has it ever happened in the past that the forward PE of Nifty fell below 15, 16? Yeah, it happened in the past, like in 2003, if I remember correctly, if my memory serves me right, the Nifty forward PE was somewhere around 11, 11, 10 and a half, 11. And same happened in 2008, right? September, October 2008. Then we saw the similar situation, if I'm not wrong, for 1 month in 2016 Jan. Then right now the forward PE is around 18. So 1999 to start with, then 2003, then 2005 for some 2 months, then 2008-9, then 2016 Jan for 1 month. During COVID, it came down to 15 and a half for few days, and then right now we are somewhere around 17 and a half, 18 times. So this is the answer to Finvest query.
Yeah, but
Navneet,
you know, I want to just add one point that see, when you look at Nifty P, I'm not telling Prakash ji, I'm telling the others. When you look at Nifty P, don't forget that in the last few years, a lot of constituents of the Nifty have been stressed. State
yeah,
Bank of India, as an example, had a huge problem in adjustment of its NPAs. Tata Steel was reporting losses. A lot of companies had not paid off debts. Bharti was sitting on, a huge amount of impact because of
Tata Motor also the similar kind of a
Tata
story.
Motors also.
Yeah,
Correct.
yeah,
So,
yeah, yeah, yeah.
so actually, that PE itself is an illusion because if it is true, I'm saying if it is true that India should now
Even for
be
some year, even
correct.
your our M&M did report losses for
Yeah.
some years. Yeah, yeah,
So if it is correct that India's earnings will improve, then the question is this P itself that was wrong. You will actually, yes, we are sitting at a very lesser sort of a price to earning for the future than we were. And don't
correct,
forget the weightage of banking is very high. The weightage of banking is very high. Now the weightage of banking was only supported by HDFC Bank and Kotak because they did not suffer in terms of earnings, but they were price to book were a significant premium. The largest bank, that is State Bank of India and ICICI, were not in the same position.
correct,
Axis Bank was not in the same position. Axis Bank had a huge write-off.
correct. Absolutely. Navneet, any last query? Huh? One more
Yeah.
query, and then we'll
No
have a
more, no more questions, sir. We can conclude and end the space.
yeah. Okay. So final remarks from you, Safir ji, like for the markets and overall, what should be the approach
Well,
gradually?
I can only say that I can only tell you what I'm doing, which is I'm telling you in all fairness, what I'm doing is that I have made a list of, or I'm continuously making a list of certain companies, like maybe five, six names. Those names to me are in the mid and small cap segment. They are companies where I want to, in the assuming the fact that the market is not going to work out right in the next 5 or 6 months, I will be deploying, small tranches of money continuously, like in literally like in an SIP mode. That SIP will not be monthly. It could be 3 days, 4 days. Then I could give a gap of 10 days. The days the market is bad, I may chip in. And over 6 months, I will accumulate some of these stocks, new stocks, while without disturbing my portfolio, because I do believe that when the market turns around, some of these companies, in fact, I expect more than a 50% jump. So then, if that 50% jump, and you know what happens is if you tell your brain, your mind, that there's a probability, of course it's only a probability, don't forget that you can end up making 50%, then the question is the cost of capital in the bank doesn't disturb you, because then you feel that what good is that 6% in the bank for the year if I can make 50%, then you don't feel bad about spending that money also. So I'm just making a list, and I yesterday turned a buyer in some of them. Today also I did a little small amount of buying, and maybe, if, like for example, the market is up a lot tomorrow, I will ignore tomorrow, because I don't know what is going to happen on Monday. US even has a holiday coming up, so I will wait. But the days the market gives me chance, and if the market becomes stronger, for example, suppose it goes up for the next few days and this FI selling stops, or the dollar index stabilizes, or some good news comes out on the oil, then I will not mind buying it, because I do believe that you should average on the way up. There's more certainty that way.
Yeah, absolutely. Well put. So I think we are now little more optimistic as compared to our last spaces, because the stock prices also come down by 10 to 15% on aggregate basis, and overall we feel that maybe you will face some kind of a trouble in, let's say, in 3 4 months time frame. But overall, if you are investing with a time frame of 12 to 18 months or 2 years time frame, you should not face any big drawdown on the portfolio. If you have surplus money, then only you invest, and invest in a SIP mode, and don't try to chase the momentum. Try to buy at a significant discount, or either if you are getting any positive news flow and you are pretty certain that now this whatever the global panic we faced, it is over. Then you can even buy 3-4% higher, which is not a bad outcome at all. So I think excellent. And with this, we in the space, and we wish all of you all the best in your investing journey. And we will keep conducting such spaces whenever we get time, and we'll try to share our knowledge and wisdom.
Yeah,
Thank you.
and please do share your feedback on Twitter, because based upon your feedback, we try to improve our interaction. See, we also don't know whether we are talking relevant to you or not relevant, whether our knowledge is percolating to you, etc. So when you share feedback, it's a continuous learning experience for us, and we are all as a community benefit.
Absolutely, absolutely. So good night, everybody, and do share your feedback, and accordingly we will, make the changes. And if we haven't taken your questions, try to put it with a tagging me and Safir sir, and we'll try to answer them as soon as possible. Thank you so much. Good night, everybody.
Good night, everyone.